Let's take a look at fees and what you don't know that can hurt you as an investor. Now, back in the year 2000, the Vanguard S&P 500 fund surpassed the Magellan fund as the largest mutual fund. Two reasons. One is very low management fees, but also they don't use active management, which can add to the hidden expenses in the management process. Now, we see that that's a pretty typical criteria that investors use right now, choosing funds based on low cost, because 17 of the 20 biggest mutual funds invest in the two lowest cost areas of the market to manage, which is large blend and large growth stocks. Now let's take a look at that from 2000 to 2018, see how well that served investors. Now that Vanguard fund, what was the management fee? 0.14%. And we look at this very, very low cost. Well, how about other funds, other areas of the market? The average U.S. large blend stock fund, even with active management, well, the management fee is 1.06% plus the cost of active management on top of that. So you look at the expenses and see there's a big difference between them. How about small value stocks? A management fee over 1.12%. How about large value? 0.89%. How about international small? 1.2%. Now, there's only one fund that we found that's been around that long in international small value, and that's 0.68, and it's an institutional fund. It's the one we happen to use. But let's take a look at these returns in these asset categories. The Vanguard fund, 4.75%, but small blend, 7.74%. And you look at the returns of all these asset categories, significantly higher than the Vanguard fund. So you see right here, the criteria of choosing things just based on low cost doesn't work terribly well. Now that brings me back to when we look at dieting information. We say, well, got to stay on a low-fat diet because fat leads to you becoming fat. Well, now we're finding studies that show that low-fat diets are not only bad for you, but they could even kill you, one study showed. What we need to do as investors is get back to what's really important, which is asset allocation and diversifying across broad asset categories here in the U.S. and internationally. Large, small, large value, small value. Expenses are important, but it's not the only criteria that we look at.